Morning, market chameleons. Thanks for joining us for the pre-market show on this beautiful Monday morning. How you doing, Dima?
Good morning, Will. How are you?
Great. Hope everyone's well. Thanks for joining us, chameleons. We have a few new people on. Remember, if you have questions, please put them in the chat. We will try to get to them. That doesn't mean we guarantee we get to all the questions. So those questions you can also put in the forum, which I'll put a link to. And I saw you answered a bunch this weekend, D, which is always great for the chameleons to hear from Dimitri over there, answering questions in the forum. So with that, you want to get started?
Yep. So before we get started, everyone, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, please contact your broker. They should be able to help answer your questions, provide you with guidance. That's what they're there for. With that, there's the disclaimer, and let's get started.
All right. What are you seeing this morning, buddy?
So let me share my screen, and of course, some pretty good news. Now we got a second vaccine. This one's even a little bit better. Is that correct, Will? You're telling me this one is actually better than the Pfizer one announced the previous week. More effective.
Yeah, it's a few percentage points better, but it gets it from the 90, 91 up almost to 95% efficacy, which I guess is very good in the vaccine world. Just to give it a perspective, when a flu vaccine, if it's 50%, is considered good. So there you go.
So that's great. So here it is, that mRNA, that's the drug, that is at the drug company Moderna.
Yep.
Up 12.6%, pulling the entire market up with it. So we'll take a look what else is going up today, but that's that news today, pulling all the stocks up. I already have it. Actually, I was playing around with it before we started the show. So this is the pre-market report, stocks that are moving into pre-market hours. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. I use this filter to look for stocks with a market cap of $20 billion or higher. There's the Moderna stock up 12.6%. But just taking a look at the number of stocks up in a pre-market that made our percentage gainers list, 81 versus 26 on a downside. And that's with market cap of $20 billion or more. And we're seeing some of those that are getting pulled down are those stay-at-home stocks. Looks like, as we're getting more news that the vaccines are going to work, and I think they're using one, actually, not one of these, but a different one Russia developed. I think that they even started using it on people over there. But we see some of these stocks that were high flyer stay-at-home stocks, now they're coming off a little bit here, and people are rotating into those other stocks. And I think we talked about also one of the benefactors of it will be energy stocks that have gotten like completely decimated over the last year, and they were already weak. I did notice this GE, actually, this one is interesting right now, up 4.3% in the pre-market hours. I think there was maybe an upgrade in it, but that's getting close to $10. And we did do a show, don't remember, maybe it was a couple weeks ago, maybe a little bit longer. There's a lot of volume on that 10 strike in January. So coming this January 2021, a lot of volume there. And G, I think at that time was like $7. Is getting closer to that strike. Actually, let's take a look at it.
While you're going to that, there's some funny conversation. Jake's actually joined us this morning and mentioned my street background as Kuala Lumpur, and that is actually Jake's hometown. No one was able to get that, but we did have a winner last week, Ben, who said it was, and I forget the name of the towers. Jake will obviously be able to chime in and let you know. But yeah, that's Jake's hometown for everyone who has any interest in Malaysia.
Oh, sweet.
Yeah.
It's really pretty. And you've had it up like every day since
almost a week. For some reason, I know Jake was on maybe one day last week, but he just noticed it this morning. So,
all right. So here's General Electric. And they've been struggling for a while with like their debt and trying to clean up their books. Up 5.6% on Friday, up 3.8% right now in the pre-market hours. I see like a lot of bullish bullish order flow coming in. Like here on Friday, $6.8 million worth of bullish calls bought versus 798,000 bearish puts, and that's above its 5-day average and 30-day average. So a lot of bullish order flow coming in there. But I'm just going to take a look at the open interest here. Look at the 5-day trends, and here this is sorted right now by the biggest concentration of open interest in the calls, and this is in the puts. So we see here 410,600 open contracts on those January 15th 10 calls. The next one is the January 15th, the 15 strike calls, and then the 12 strike calls. So a lot of open interest there, even though in the last 5 days, it looks like maybe there's some closing out in there. I don't see, at least in the last 5 days, there hasn't been adding to that open interest, but it's sitting there, 410. That compares to like the biggest open interest in the puts, 113,000. So like 4 to 1. Let's come back to that pre-market. And obviously, look here, let's just take a look on that options chain. So here's that GE 960. Here's the January 15th. And these are the 10 calls that came out 38 cents, 39 cents. And they're not that expensive. I mean, if this stock breaks through 10 bucks and keeps going, eventually these will move, right? They're going to be in parity. So we'll see. But here's the open interest, 410,000 on that strike. So keep an eye out on that. And I think they did get upgraded this morning. Let's take a look at really quickly at the unfiltered list. And you did say you were getting some questions in the morning, Will. So maybe
someone wanted to take a look at an SPY straddle, buying it. Someone wanted to look at Zoom puts. Obviously, they're bearish Zoom. I mean, it may be a little late playing all this news, but who knows? Jake actually in the conversation's taking the other side of it. I mean, until this vaccine gets into the marketplace, you really don't know the effects, right? Until it's taken in mass. So whatever.
Let's take a look at both. We'll take here's Zoom over here. So that's ZM. They're big. That was down 5.9% on Friday, down 4.5% right now in the pre-market hours. And just taking a look at that 52-week range, $62, 52-week low, $588, 52-week high, now $385. So very volatile, who knows? I mean, right now trading 93 times its sales.
Yeah, it's got a healthy PE ratio, 540.
Valuation basis really high, but they're probably like one of the biggest benefactors of like the stay-at-home economy, right? Like I can't even imagine who else. I guess Amazon and some of these internet retailers did really well, but Zoom, especially because I've never even used Zoom before this year. Like that's when we kind of started using it too. But $114 billion market cap. How do they make money, by the way? What do they upsell if you're using?
Yeah, well, we pay a premium feature. I mean, depending on storage and webinars, how many people you're going to have on a webinar, it's all layered costs. You can get a free account, but that limits you. You can't.
So a lot of people will use the free account, and then they're hoping that like company accounts will start upgrading to when you're using more of their services.
For anyone who remembers, probably Jake for sure, maybe Mike's on, remembers our early webinars, we'd have problems, and our morning shows literally every single day. And we were using a product called Webinar Ninja. Well, this was their time to shine as well, right? Their webinar project, since everyone started talking about Zoom, Webinar Ninja's searches have dropped by almost 90%.
Wow.
So they have run over competing products. Zoom has.
Their technology is great. I think that it's very easy to use. Their technology is great. But here's right now Zoom. We're getting bearish order flow sentiment in the stock. The options right now, they look like they're pretty elevated. So to to hedge for 30 days to hedge your downside risk costs you 10.5% of like what the price of the stock versus, a average of 8%. So that's your protection for 30 days. Let me take a look at, we don't have enough data for the trade ideas. So that's really quickly what's going on in Zoom. Implied volatility.
Like with that volatility up, if someone was looking to get short, like maybe looking at a credit call spread, something like that.
Yeah, I mean, I see that they're going to report earnings November 30th, but you're probably right. Like you say, if you're going to play this stock, it's very volatile all over the place. You want to probably use some defined risk strategies like spreads, right? Call spreads, put spreads. This way you're not, left. And look how expensive these options are. It's $400 stock, very expensive. Here's the at the money. Where did it close? 403. So 402, 9 days out. You can see there that's almost $50 for that straddle, 40, 44. I mean like 48, 49 bucks, something like that. So very expensive options. Probably want to spread it off and use spreads. But look, this is going down with other stocks. We could take a look at, even Facebook. That's another one. I mean, not getting hit as hard, but let's see, Amazon, down a little bit. And they're going down on good news, right, for overall economy. So the market's up today, they're looking a little bit lower. These are the stay-at-home stocks.
Yeah, and even these biotech, Pfizer, Moderna, Jake made a comment, and there's a lot of chat around it that both CEOs have liquidated most of their positions.
Really? Yes. So maybe that's an indicator right there that how they look. But here's the XLE energy stock we were talking about that got hit really hard. That's coming back, and of course that's one way to play reopening the economy, right? The global economy. So that's the energy sector over here. What else we're talking about some banks. I know HSBC, that's coming back a little bit as well, up 4.1%. So that's been getting hit a lot. Who knows? I've seen that now bouncing off its lows. Let's take a look at, did you have, SPY?
SPY. Someone was looking at the straddle, how the straddle's priced right now. Okay. I think they were looking at it as something they may want to look at purchasing.
Okay. So here's our benchmarks for the straddle. So this is looking at a 30-day constant maturity. Okay. So this is looking for straddle, buying at the money call, at the money put, 30 days to maturity. We see here the cost of that straddle right now, 4.3%. That's 4.3% in premium as a percentage of stock price. That compares to a 52-week average of 5.4%. So right now we're 1.1% below that 52-week average. Implied volatilities are coming in, with the market going up. So at this point, we're sitting below that 52-week average. Let's look at the 60-day maturity. So this is going out to a little bit more longer dated options, 60 days out. That straddle is 6.4% premium as a percentage of stock price compared to a 52-week average of 7.7%. So that's 1.3% below that 52-week average. 90 days out, we're looking at a straddle that'll cost 8.1% compared to a 52-week average of 9.4%. So that's 1.3% below the 52-week average. So same as here. So you're getting the same discount to 52-week average. Let's go out further. So here we got the 120-day straddle. That right now is 9.4% premium as a percentage of stock price, compares to a 52-week average of 10.9%. So that's discounted 1.5% from its 52-week average. So that gives you a comparison of how the straddle looks on different maturity dates. And maybe that's one thing I'll take a look at today, because what today's webinar tonight, we're doing calendar spreads, looking at how to spread off options on different expirations. So maybe I'll take a look at this one as one of the examples we'll do tonight.
So anyone who missed that, tonight, Dimitri's doing a webinar on calendar spreads. I will put a link up momentarily, but an email has been sent out. Another one will be sent out today, but I'll put a link right now as well, D. Thanks for reminding me.
Yep. All right. Thanks. Well, was there another question that I missed?
Well, we did have a new chameleon join. Since you're going through every questions, I know this is for a lot of people. But he's asking it. Call spread and put spread at the same strikes. Is there anything different about what's different about them?
A call spread or a put spread?
Yeah.
Well, are you selling them or buying them? But yeah, they're going to be, it's direction, right?
Yep.
A call spread is one direction, depending which side you do. A put spread is the opposite direction. So if you're buying a put spread, you're bearish. If you're buying a call spread, you're bullish. If you're selling a call spread, you're bearish. If you're selling a put spread, you're bullish. So direction is one, one of the differences. Obviously, then which call spread are you doing? Because it depends on what strikes you're doing. But yeah, there's definitely a difference between a call spread and a put spread.
Perfect. And I put out a link to Dimitri's done many webinars on it, and they're all on the website. I put out a link for you to help to look at that. Thanks.
Okay.
Steve.
Yeah, no problem. Any other questions I could get back to?
Well, we had NEO is another question. I mean, what's going on in NIO with the vol and the trading around it? Do you see anything in NEO?
So I'm just going to take a look really quickly. And this has been a high flyer, right? This is also
absolutely
electrical hardened. I see that's coming up with earnings actually tomorrow after the market close, I think. Let's just take a look here. Order flow so far has been bearish. Market's elevated. So let's just take a look if we have any history here. Okay, so this is the history of NEO on earnings. And we see here that, and I don't think we have like 12 earnings yet in NEO. I don't think so. But this is what it looked like heading into earnings. This is what the straddle implied the move. These are the bars here, up or down. So if you're buying the call and buying the put, you're looking at a percentage move that needs to exceed the cost of that straddle, right? That's what these bars are. And the actual move is in the red if it's down, in the green if it's up. So this one right here, this big one that I'm hovering over, December 30th, 2019, NEO reported earnings. They were up 53.7%. The straddle was implying a move of 21%. So you could see how, even though that's a huge move to cover, it covered at 53%. So it moved a lot, more than 2 times the predicted move. However, here are the averages. On that, 75% of the predicted moves we could see overestimated the move. So 75% of the time, it was within the range. The average of the predicted moves was 18.7% heading into earnings. The average of the actual moves, realized moves, 17%. So that's a 1.7% differential between the implied and the realized move. But look how high these, so 1.7% differential is not as big if the moves being predicted were like 5%, versus 4% or whatever. So this is how the averages look like in NEO. Let me take a look at what the implied volatility did. So even here, we're looking at a 30-day option, an option with 30 days to maturity. And on average, the day after reporting earnings, the implied volatility was down 12% on average. So day before, the average implied volatility was 126.7. Day after, the implied volatility was 112.4. 5 days later, it actually ticked up a little bit, on average 113. And we're at 158 right now. So here's what it looks like. This is as of yesterday's close. We haven't opened yet, but you could see here we're on the high end. This is the average, 126, the low 74.2, 158.1 is the high. So we're on that high end right now. So that's NEO heading into earnings expected tomorrow after the market close.
Awesome. Great job, D.
Let me take a look, unless you have some more questions. I'll just take a look really quickly. Some of the bullish and bearish ideas we have here. So when you're coming here, and this is the home page, you could go to see what's going on in the most active stock options. So usually you'll see the same ones: Apple, Amazon, Baba, Tesla, SPY. Here's some seasonality plays. So this is actually looking for stocks that have high positive seasonality returns, for an upcoming period, and matches up a strategy with that period. So here's like one in Nike. So Nike from November 13th to December 4th, which is where this expires. 83% of the time, historically, during that calendar period, Nike was up for an average gain of 3.7%. So to match up with that statistic, here it filtered out a bull put spread, credit bull put spread, selling the 126 put, buying the 122 put for $1.02 credit. We think it's worth 58 cents. So that's a 14.9% theoretical edge with a historical success rate of 81%. And if you open up that report and you kind of go through it, here it gives you a little bit more information around this strategy. So we see here the stock, Nike, it's outperformed the S&P on a 1-year basis and a 3-month basis. Last 2 weeks, it's weakened, so it's underperformed the S&P in the last 2 weeks. So you can read about it here, where the SPY increased by 9.7% versus Nike 6.8%. So still up, but underperformed the S&P 500. Seasonality, that's what we're looking at right now. It's in a bullish seasonal historical period from November 13th to December 4th. This is the historically up 83% of the time for an average gain of 3.7%. It's also on a technical uptrend, meaning that all the moving averages are crossed in a bullish manner. So 50-day above the 250-day, 20 days above the 50-day moving average, and the stock prices above all the moving averages. Here, you could take a look at that payout diagram, what it looks like at expiration. Since we're running lower on time, I'm just going to kind of go through here's the takeaways. So you have here, we looked at the stock from different price action analysis. So this is a summary. On a 1-year basis, it's outperforming the market. 3-month basis, outperforming the market, giving it a bullish. 2-week basis, we've seen it's a little bit weaker than the market. So that's bearish. Seasonality, bullish. Technical uptrend, it's also bullish over the hold period that you're expected to hold this option strategy. So that's really quickly kind of going over a seasonality play. XLY, that's the next one. So this is in a consumer discretionary ETF. This also heading into historically 83.3% success rate over this period from November 13th, which is where we closed, to December 4th. 83% success rate, average returns of 1.9%. So here are the two bullish spreads that it filtered out. Selling on December 4th, selling the 156 put, buying the 152 put for credit of $1.74. We think it's worth $1.18. That gives a theoretical edge of 24.9% with a historical success rate 72%. Here's a bull call spread, buying the 151.5 call, selling the 156.5 call for $2.78. So this one is a debit, you're buying. We think it's worth $3.46. So that's a 24.4% theoretical edge with a historical success rate of 72%. Next one, let's do one more and then I'll move on. General Motors. That looks like on seasonality from now to November 27th. So this one is looking at a different expiration month, November 27th, 80% historical win rate. The stock was up 80% of the time for this calendar period for an average gain of 6.4%. Here we filtered out two bullish spreads, one put spread, selling the 40 strike put on November 27th, buying the 38.5 put November 27th for 38 cents credit. We think it's worth 23 cents. That's a theoretical edge of 13.2% with a historical win rate of 81%. A call spread. So this is buying the 37 call November 27th, selling the 41 call for a debit of $3.05. We think it's worth $3.37. That's giving theoretical edge of 10.6% with a historical success rate of 73%. So that's in General Motors. Let's look for, since we looked at some bullish, let's look at some bearish plays. So this is looking for stocks that have been in a bearish downtrend. Okay, so a lot of these, I'm just going through them. They look like it filtered out these ultra ETFs. Here, this one's natural gas. So a lot of these look like, you know, these daily ultra VIX is one here. So let's just take a look at it. I don't really like to play these ultras that much, you know, the double longs, double. If you do, you know, I always use the defined risk, you know, but let's just take a look at this. So this is the ultra short QQQ. Here found a bear put spread. Here's a long put, but let's just take a look at the, let's take a look at the spreads here. So bear put spreads, it's looking at buying the December 4th 20.5 put, selling the December 4th 17 put. It would cost $1.94 in debit. We think it's worth $2.30. That gives you a theoretical edge of 18.6% with a historical success rate of 72%. Here's a bear call spread. So this one is we're selling a credit spread, looking at the December 4th expiration, selling the 17 call, buying the 20.5 call for $1.55 credit. We think it's worth $1.20. So theoretically, 18% theoretical edge with a historical win rate of 72%. Let me see. These are all. Let me see. This is also leveraged ETF. Leveraged ETF. It's filter now. Let's look at this one. So this one is natural gas here. So natural gas, and here, if you open up this report, it'll kind of show you an analysis on the stock. So you see here, natural gas underperformed on a 1-year basis, the S&P underperformed on a 3-month basis, underperformed on a 2-week basis, entering a bearish seasonal trend, and the stock is just on a downtrend. So you see here, there's a lot of bearish price action in UNG. So let's take a look at what we filtered out. I'm going to take a look at the spreads. So here, bear put spread. Bear put spread, UNG, buying the December 11th 13 put, selling the December 11th 11 put, $2 put spread, $1.46 debit. We think it's worth $1.57. Given that's a that would represent a 7.5% theoretical edge with a historical success rate of 74%. So that's UNG. We're right up against the bell wheel. I guess there's not much time,
Yep.
today.
Awesome job, Dima. Thanks for putting this together again. Everyone, thanks for joining us. Some great chat. Remember, 6 p.m. tonight, we're talking calendar spreads. That's correct, right, D?
Yep. So hopefully we see you guys tonight. If not, join us tomorrow. We'll be doing, we're doing another pre-market show in the morning.
Yep, and this is the last day of Kuala Lumpur. In the background tomorrow, I will put another chameleon's hometown. You guess it, and I'll send you a chameleon cup. But I'd like the name of the chameleon as well, which would be great. Thanks, everybody. Dima, great job. I'll see you tonight, buddy.
Thanks, everyone.
Have a good day. Trading day, babe. Bye.
Bye.